Well, Simon, we're going to have fund managers up in arms again, especially those that are overexposed to MTN. The stock is down at 104.44, down 3% again today. It has moved down in tandem with Vodacom that has pulled back, as I said, by 4 1/3%. At the moment, Vodacom trading just below that 60 Rand level. Any news flow out, particularly hitting these telco stocks?
Vodacom evening, Bronwyn. Vodacom went ex-dividend today to around 75, which means about 3% of that move, 3.2%. And Vodacom was ex-div. The rest was really selling, so down just over 1%. MTN hit hard again. Earlier in the day, a story out of India that they were looking at Loop Telecommunications or another carrier in India. That got denied by MTN. And MTN really, it had run up to around the 106, 108 level, seemed to have overrun, coming back. It seems to be most comfortable about the 100 Rand level, and there's just constant rumors out there which suggests that the market is unsure whether they do or don't want them to do a deal. MTN's unsure, and more importantly, MTN seems unable to do one.
And how do you feel about the investment case for MTN?
I like MTN. I think we can pick it up around the 100, maybe even 98 level. I think if you've got time on your side in a couple of years, I certainly think MTN's a good place to be in. It's tough out there, but they certainly proved they can work well in emerging markets. Cell phone technology, and not so much voice, but a lot of data in those emerging markets is going to be huge. MTN's got the track record. Short answer, I like them.
Looking at ABSA today, Maria Ramos saying that South Africa's biggest retail bank is looking to buy a bank in Nigeria. The stock ended at 125 Rand, down 1%. Is this the right move, in your opinion, given the fact that perhaps Standard Bank has first move advantage on the African continent and has always been celebrated by fund managers as having that strong emerging market footprint?
Yeah, and Standard Bank undoubtedly known as the biggest bank in Africa, very big in emerging markets, predominantly emerging markets, some non-emerging market assets, but mostly into emerging markets. ABSA really was very much a South African bank, obviously with that Barclays parent holding there. Nigeria is a very, very difficult market, but at the end of the day, I think banks looking to expand, I think is a good idea. I think it's about buying the right assets at the right price. I think Nigeria is certainly a country worth looking at, but they've got to make sure that they buy the right asset, right price. If you remember last year, there was talks about some of the banks being unstable, perhaps having to be bailed out, and even talks that I think Standard Bank and FNB were perhaps looking to take stakes in some of them. Nothing came of that. I would expect banks such as ABSA to be on the lookout for quality. Mondi closed at the top of the top 40, up 2 2/3% at 48 Rand 10. Any news flow we need to take into account on the paper stock? I was hunting around for news on Monday. I couldn't particularly find anything. It just looked like buying going through. If we take a step back, bigger picture, paper stocks are going to do well when economies recover. But let's not kid ourselves. Economies are recovering, but they're doing it slowly, cautiously, and a bit fragilely. I think it was maybe just someone taking a position in Mondi. It's a lowish liquid stock. It doesn't do huge volumes going through. So someone taking a position can certainly push a price a bit. Did you pick up a story on Santam agreeing to buy the rest of Indwe broker holdings for 263 million Rand? Some movement in this mid-tier arena around the insurance and brokerage assets. I did. Santam already had a stake there, of course, a minority stake. They were the big of the 3 shareholders, but the other 2 shareholders collectively had just over, I think, 52% between them. We're seeing, I mean, BJM selling off their part of their business to the Russians, and the retail business going to First National Bank. Ndiwe, as you say, but a brokerage insurance there, certainly cleaning up. And I think it's been a tough couple of years in that space, in that middle tier space. The small guys just basically don't survive. The big guys can rough it out. The small guys are finding it really, really tough. We're seeing things being restructured, and I think Santam, certainly it looked like a large amount, but chatting to 1 or 2 folks, they said decent price, and Santam just picking up a good opportunity there. And just turning our attention further afield, we had US consumer spending up 0.2% for the month of May, but the market appeared to focus on that savings element out of the US, up 4% for May, saying that it may give the impression the US consumer is still nervous to go out and spend at full capacity with a potential double-dip recession still on the horizon. Would you follow that train of thought? I would. I don't think the double dip is necessarily the issue. Certainly the US consumer is still nervous. I think what happened in 2008, 2009 really shook them. They'd had this housing boom which they'd done incredibly well of, and the bottom just fell out of it. The recession was really severe in the US, and I think they're still nervous, and therefore they're saving. And we've seen this trend over the last year and a half of US citizens saving like we've never seen before. And your point is well made, is that the US economy is not going to really get going very strong until that US consumer stops saving a bit and starts spending. Saving's always good, make no bones about it, but the US economy needs their consumer spending, and at the moment they're not, and that's going to keep the recession fragile. And maybe rather than them worried about the double dip, they actually help lead into it by not spending.